Okay, so for the interest of time and para hindi masayang yung oras natin, no, we are also catching up on our schedules. So let's go directly to the discussion on regular income tax. So tapos na tayo dun sa final income tax, tapos na din tayo dun sa capital gains tax, no? And as I've mentioned for several times there are also items that will be under the regular income tax, which was also mentioning section 24A of the National Internal Revenue Code or of the tax code. So let's go through the characteristics of regular income tax first. Okay, so um, it is general in coverage, so anything that does not fall under the final income tax or capital gains tax, it's generally under the regular income tax, which will, in essence, will be included as part of your gross income. Kasama po siya dun sa computation ng gross income. So, regular income tax applies to all items of income except those that are subject to final tax, capital gains tax, or special tax regimes. Yun sinasabi ko kanina. A net income tax, okay, so therefore, you are going to be given allowable expenses, deductible expenses. As of the moment, there is no more personal exemptions. We have eradicated that, or we have um, the Congress already removed that when they uh, amended the National Internal Revenue Code and just gave a flat out 250,000 threshold for exempt income. So the regular income tax, okay, in its imposition is a net income tax in the sense that it has also in its computation a consideration for the allowable deductions as provided for in the National Internal Revenue Code. There is also an annual income tax which applies to yearly profits or gains. The gross income and expense of the taxpayer are measured using the accounting method adopted by the taxpayer and are reported to the government over the accounting period selected by the taxpayer. So pag sinasabi kasi nating accounting period, kung naalala mo in the previous discussion that we had, sabi natin meron po kasing pwede magkaroon ng fiscal year or calendar year. So if you are fiscal year, like schools mostly have fiscal year, the non-profits usually have fiscal year, which usually ends on June 30 and starts on July 1, no? So it depends on the accounting period, okay, chosen by the taxpayer or selected by the taxpayer. Meron din tayong tinatawag na creditable withholding tax. Kaya sinasabi ko kanina, the final tax no is not the same as the creditable withholding tax. The final tax is not deductible from the tax due, but the creditable withholding tax is deductible from the tax due. These are advanced taxes that must be deducted against the regular tax due in computing the tax still due to the government. Progressive or proportional tax, it imposes a flat or proportional tax. Okay? In the determination of taxable income, we have, okay, classification rule. Okay, compensation income, it arises from an employer-employee relationship. And then you also have business or professional income, which arises from selling of goods or rendering of services for profit. Okay, so for purposes of computing taxable income, if you are only earning pure compensation income, this is going to be your pro forma formula or computation, no? So you will start with the total compensation income plus the non-taxable income, okay? And then 13th month pay and other benefits allowed exempt of 90,000 and taxable compensation income will be multiplied by 0 to 35% depending on the tax bracket where your taxable income would fall. Okay? Sa tax table, no? And for non-taxable income, it includes legally mandated salary deductions and items of compensation income that are exempted by law, contracts, or treaty from income taxation. Okay. And then there's a different format when you're earning under pure business or professional income, no? So your um, Income, you'll start with your gross income and then add whatever non-operating income that you have, like passive incomes that is not subjected to final tax. So that's going to be your gross income. Kaya ko laging sinasabi kanina that those items under final tax will not be included as part of your gross income because right now makikita mo pala na meron talaga tayong gross income dito. At meron tong portion na i-add mo lahat ng everything else na hindi pa na-tax ever is isasama mo dito. Kahit hindi po siya kasama dun sa income ko from the business, yes. As long as you earn, okay? Okay. So, yan, saban natin, i-add natin yung non-operating income. That's going to be your total income, gross income. Then you deduct all the allowable deductions, allowable expenses. We will be discussing the allowable expenses later on, but for now, please remember how you're going to compute for the taxable net income. It is important that you understand and you know how to compute the taxable net income because later on you will be asked how much is the tax due and the basis for the tax due is your taxable net income. All right? And then there's also another kind of person which is a mixed income earner. The income from both sources is simply globalized or totaled. So for example, in this case, case number one, he or she has 450,000 from compensation income and then he earns on the side 45,000 from non-taxable compensation. Okay? And then other income of 30,000. In case number 2, there is 600,000 gross business income and then there's a deduction of 250,000 allowable deduction for the business and earns another income of 30,000. In case number 3, there's a compensation income of 450,000, non-taxable compensation of 45,000 plus gross business income. In case number 4, you have all those features but different amounts. Okay. So, in the computation of case number 1, balikan natin. Ito yung scenario niya. 450 yung compensation income. Non-taxable compensation is 45,000 and other income is 30,000. How would it look like? Ganito. Gross compensation income less non-taxable compensation. Therefore, your taxable compensation income is only this, 405,000. 450 minus 45 is 405,000. Add gross income, other gross income. Makikita mo dito sa scenario, there's a 30,000 other income. So add mo lang yan. Your taxable income is 435,000. Paano naman po sa case number 2? Ganito po siya ang itsura. Gross income from business, add other gross income is equal to total gross income less allowable deductions of 250,000. Therefore, your taxable net income is 380,000. How about case number 3? Mixed income earner, meron siyang gross compensation income na 450 less non-taxable compensation income of 405,000. So your taxable income from compensation is 405,000. Then you add your business income, net taxable income of 380,000. Your total taxable income will be 785,000. How about case number 4? Paano naman kung ganito yung itsura, 'di ba? Makikita mo dito if you notice yung business loss niya, hindi na yan income. Because if you notice dito sa case scenario dito, the gross business income in case 4 is 200,000 but he spent or has deductions of 250,000. All right? So kung makikita mo dito sa case number 4, meron siya actually, okay, 200,000 na business income. Nag-add siya ng other gross income niya na 30. So total gross income niya is 230,000. But the allowable deduction is 250,000 and therefore the taxable loss, net taxable income is negative 20,000. So loss yan, no? So hindi siya taxable. Net loss siya of 20,000. Notice na yung 20,000 hindi natin dinideduct doon sa compensation income. And usually yung compensation income niya ay na-subject na rin yan sa withholding tax on compensation, which is remitted usually every 10th of the month under 1601C of the employer. And the end of the year, you will also receive your 2316, no? Yung certificate of withholding tax. okay, on compensation na ibibigay sa kada empleyado every year. And then you will use that certificate so that you will use that as part of the declaration when you do your annual taxes, since you are not allowed under substituted income tax return filing because you are not earning purely compensation income from one employer. Okay? So, taxable income, please note, a net loss may be carried over as deduction against net income of succeeding 3 years. This is referred to as the loss carryover or NOLCO, net operating loss carryover. Alright? So income tax reporting format, you will have this. And I'm sure you're very familiar with this because you have your accounting one already. So it's going to be from the net sales less all plus add all other taxable income from operations not subject to. Notice there is always not subject to final tax because if it is already subject to final tax, you no longer have to add it here to get your gross income. All right? So in total sales and then less cost of sales or services, okay, that's going to be your gross income from business operation, and then add non-operating income, then your total gross income less all allowable deductions, that's going to be your net income. Okay. Okay, let's go through the definitions and distinctions of terms. Revenues, it pertains to gross inflow of benefits, total return arising from primary operation of business. Okay, it includes return of capital and return on capital. Okay, sales pertains to revenue from sale of goods, fees pertains to revenue from sale of services, receipts pertains to cash collection from sale of goods or services, and gross income pertains to return on capital or net concept. Okay, other taxable income from operations includes revenues or receipts from incidental or secondary operations aside from primary operations. And non-operating income pertains to all other items of gross income such as gains from dealings in properties, income distribution from general professional partnership, taxable, trust or estate, or from joint venture, casual active income, and passive income not subject to final tax. Let's look at an illustration. Again, an individual taxpayer who is using the accrual basis in his manufacturing business reported the following results of operations in the preceding year. The sales of net of returns and discounts is 6 million and the cost of sales is 2.7 million. There is a dividend income net of final tax of 54,000. Notice of the word there, net of final tax of 54,000, and business expenses of 2.4 million. Okay? So, in this case, what will be our net taxable income? Okay, can you try? What's our net taxable income here? Anyone?
Ano, ano sir? 900,000?
900,000. Do we add the 54,000 dividend income as part of gross income?
I think no sir, since it is subjected to final tax.
Because it is already subjected to final tax. How about this one? Okay. Okay. So, meron pa pala to. Ito, karagdagang information. There is also gain on sale of old equipment, sale of scrap metals. By the way, earlier, the answer, if the problem stops here, the question is net taxable income, then the 900,000 answer is correct. Okay, but there is additional information given. Gain on sale of old equipment is 150, sale of scrap metals 300,000, interest income on employee advances of 67,500, and gain on sale of domestic stocks directly to a buyer of 10,000. So you will see here that we are adding the 300,000 other taxable income from operations, scrap sales, So that goes our that makes our sales revenues, receipts, fees total of 6.3 million. Then we deduct the cost of sales of 2.7 million. Therefore, the gross income from business is 3.6 million. Then we add the non-operating income of 150,000 from gain on sale of old equipment and interest income on employee advances. These two are not subjected to capital gains tax or final taxes, so they are added as part of the gross income. So it impacts your gross income. So added that, your total gross income will now be 3.817500. Now your allowable deductions, as you can see in the illustration, is 2.4 million, no? So you have 2.4 million allowable business expenses deductions yan. Therefore, your net income is 1,417,500. Note that income items subject to final tax, like the dividends and capital gains on stocks, are excluded in the computation of the gross income subject to regular income tax. Makikita mo yung given, meron sana siyang gain on sale of domestic stocks directly to a buyer. Okay? Hindi po siya sinama natin at hindi din po natin sinama yung dividend income. Bakit? Again, because the dividend income is subjected to final tax for dividends, and the income that they earned on the gain on sale of domestic stocks is also subjected to final tax. Okay? As illustrated earlier in the topic, final tax. Okay? So that is a comprehensive example of computation of the net income. Reporting format for corporate taxpayers, ito po ang itsura niya ng pro forma. Net sales less cost of sales equals gross income from operations, add other taxable income from operations not subject to final tax. That would be your total gross income for the corporation, and less allowable deduction, that will be your net income. Now, assume the sale of illustration except that the taxpayer is a corporation. You have the same illustration as earlier. You will see here the net income is the same. Is it the same? 1.417. Yes, it is the same. Okay? Okay. So the difference in presentation between individuals and corporations is the basis for optional standard deduction. So here, allowable business expenses is itemized, ito 2.4 million, but you can also opt to have optional standard deduction. The basis for individual taxpayers is the total revenues or receipts from operations, while for corporation the basis is on the gross income subject to regular income tax, whether or not they arise from regular business operation. So there are different types of regular income tax, individual and corporate income tax. So for individual income tax, obviously is for individuals, no? Individual income tax has a tax table. Tax table, ito yung sinasabi ko kanina na graduated tax table, no? Graduated because it increases as the tax base increases. So you will see the individual income tax is progressive income tax. Ibig sabihin ng progressive, as the tax base increases, the tax rate increases. Kapag daw po ang income mo is less than 250,000 and below, zero ang babayaran mong tax. Pero kapag ang income mo ay lumagpas ng 250,000 and it almost reached 400,000 but not more than that, your tax rate is 20% of the excess only of the 250,000. Okay, if it exceeds 400,000 but not more than 800,000, then it's going to be 30,000 on the first 400,000 plus 25% on the excess of the 400,000, and so on and so forth in this table. Okay? So, the scope of progressive tax, it covers all individuals including taxable estates and trusts. Estates and trusts are taxed as if they are individuals. Okay, NRA and ATB is exempt. NRA and ATB meaning non-resident alien not engaged in trade or business, because they are subjected to 25% final tax on gross income, if you still remember our discussion earlier. All right. So let's take a look at an example. A resident citizen earned the following. Compute for the taxable compensation income and tax due. Compensation income within the Philippines, 1.25 million and compensation abroad is 150,000. Okay. So let's look at it. Taxable compensation is 1.25 plus 150. That's total of 1.4 million. That's the lower limit of bracket. Saan siya mag-fall? Dito sa category na to. Kung makikita mo, ang income niya is 1.4. So, papasok siya dito sa more than 800 but not more than 2 million. So, ang tax bracket niya is itong nasa 130,000 plus 30% of the excess of 800,000. So, makikita mo dyan, nakikita mo dito, may 130,000 na siya. Plus the excess of 600,000 will be multiplied by 30%, which is actually 180,000. 180,000 plus 130,000, that will be your total income tax due of 310,000. Note that resident citizen is taxable on global income. Okay? So dito kasi nakalagay dyan sa problem na yan that the taxpayer is a resident citizen. So yung income niya from abroad is also taxed. Okay? Within and outside the Philippines. So yan yung essence that you know the differentiation of whether a resident citizen or a non-resident citizen or a resident alien or non-resident alien. So resident alien is taxable on income within the Philippines lang. Okay? Okay. So, optional rate of 8% income tax. Okay. This is very relevant for you, especially if you are an individual, no? Okay. So the train law introduced optional income tax for self-employed and or professionals, kagaya ko, di ba? Wherein they can opt to be taxed at 8% of sales or receipts and other non-operating income. It is a form of a bundled tax which enables one-time compliance for two taxes which otherwise require separate filing and payments. So that is progressive income tax computed under the individual tax table or the 3% business tax, okay, business tax on sales or receipts. This is in lieu, ha? So, makikita mo dito sa option ng 8% kasi kapag self-employed ka, you're going to pay your percentage tax, of course, and then you're going to pay your income tax. If you choose to just be taxed at 8%, hindi ka na magbabayad ng 3%. At hindi ka rin itatax based doon sa taxable income. Ito, ng graduated rates. Ang laging tax rate mo is 8%. Okay? Pero note, medyo tricky lang siya, di ba? Kasi 8% of sales or receipts. Walang deduction. Okay? However, yung graduated tax rate naman is meron siyang deduction, itemized. So, depends on whether or not you have a lot of expenses that you can claim. So maybe it's better for you to just avail and not opt for 8%. But if wala ka naman talagang masyadong substantiation of expenses at malaki ang kita mo, baka mas makakatipid ka sa taxes if you choose 8%. Option yan. And in lieu of that, 8%, wala ka nang babayaran na tax na iba pa. Hindi ka na magbayad ng percentage tax. Okay? At wala na rin kang income tax na based on graduated table. O, diba? So, masaya din naman ang 8%. Alright? How about corporate income tax? Sa corporate income tax naman, meron tayo, the regular corporate income tax is a proportional or flat rate of 30%. And then in the introduction of the CREATE law, it's already at, you can be taxed at, I think, 25%. No? %25. Okay, so under the corporate income tax, from 30%, it's now going to be 25%. And if it even further provides that meron lang siyang qualifications din, no? Yung minimum corporate income tax is also reduced to 1%. Okay? So the new rate is really 25%. And then, it can also be availed by corporations who will qualify that the tax rate could be just 20% if the corporation does not earn more than 5 million in a year and the total assets of the corporation does not exceed 100 million. Okay? So, the 30% is an old rate. This is under the train law. Tapos, nagkaroon tayo ng create law, di ba? Then it changes, okay? The rate. It applies to any corporation except subject to final tax, of course, as non-resident foreign corporation and FCDU interest income not subjected to final tax, special grant, or those subjects to preferential tax rates or tax regimes, and then exempt corporation. So, for example, so kung gagamitin natin dito, ang ating uh, new rate, no? A corporation has net income of 1.2 million in the Philippines and 800,000 abroad. So, if it's a domestic corporation, isasama natin lahat because a domestic corporation is taxable for income within and outside the Philippines. So, it's 2 million. Under the old law, ang train law, then 2 million times 30%. But under the create law, dito, if assuming they qualify within the threshold na 5 million, not more than 5 million, so 2 million lang naman, so qualified siya dun sa income. Assuming na hindi rin umabot ng 100 million yung net assets, yung assets niya, total assets niya, then qualified siya for 25%. Qualified siya for 20%. Kasi under the create law, 25% na lang ang rate ng. It should not be 30%. It should be 25%. So right now, if it's under the create law, yung tax niya, if hindi siya qualified sa preferential rate, it's going to be 500,000. Pero kung ma-avail pa talaga niya yung special rate ng 20% dahil hindi siya umabot ng more than 5 million at hindi rin umabot yung assets niya ng 100 million, 20% lang yung tax niya. So yung tax niya essentially is only 400,000. Okay? So nakita mo yung impact. Okay, what if it's a resident foreign corporation? Sa resident foreign corporation naman, okay, walang masyadong changes dito sa create law ang resident foreign corporations kasi mostly ang nagkaroon ng impact is sa resident foreign corporations, RFCs, nag-change lang siya to 25% pero wala siyang preferential option for the 20%. Wala ring qualifications. So, under this illustration, under the create law, makikita mo ang magiging tax niya is only going to be taxed on the 1.2 million kasi yun lang naman ang within the Philippines. Wala nang pakialam ang Pilipinas at hindi rin niya malalaman na meron siyang income abroad. So, 1.2 lang ang basis niya pero you will not use 30% anymore. You will use the 25% rate under the create law. So if it's 25%, the tax is going to be 300,000. Okay? Okay. And dito naman sa minimum corporate income tax, ito yun din yung 2% is the old rate. The 2% is the old rate. The new rate is 1% na tayo ha. Minimum corporate income tax. Okay? For domestic corporations. Even if corporations are losing in business, so ito, meron po tayong mga rules on the application of the minimum corporate income tax. Hindi po siya ina-apply within the first 3 years of operation. Doon na po siya sa 4th year, commencing in the year after 3 years. So that's on the 4th year. On the 4th year of the corporation, even if you are declaring so much expenses so that you have a negative income or net loss ka na, or if you have a very low income, you will be subjected to minimum corporate income tax. And it was previously 2%, but because of the create law, it's now 1%. O, diba? So, special corporations are those enjoying lower rates, but not 0%, such as private schools, non-profit hospitals, and PEZA or PIEZA registered enterprises. We also have exempt corporations, which are those enjoying 0% tax rate, non-stock non-profit, okay? Just such as government agencies, non-profit organizations with no taxable income, cooperatives, and those registered with the Board of Investments enjoying income tax holiday. And then there are several income tax returns, of course. Okay. I have the income tax returns can be browse through the BIR website, www.bir.gov.ph. You can go to this for annual income tax return. Okay, there's also some attachments here. And then for individual income tax returns, you will also find this in the form. Makikita mo to. Okay. Usually the tax period is January 1 to December 31 for individuals. Okay, calendar period tayo. Unless impracticable to do so. And then substituted filing tayo if you are earning purely compensation income. Okay? Ang magiging substitute mo dyan is your Form 2316 and you will no longer be required to file your own income tax return. If, again you are only qualified under substituted filing, okay, if you are earning purely compensation income from one employer. Okay. Individual tax administration, substituted filing shall apply only to, ito ang sinasabi ko kanina, employees receives purely compensation income and he receives income only from one employer. The amount of tax due from the employee at the end of the year equals the amount of tax withheld by the employer. The employee's spouse also complies with all the three mentioned conditions. So kung may asawa ka at kasama mo din is under substituted filing, wala na kayong problema. You are all, both under substituted filing. Okay? Substituted filing, however, will not apply to non-resident aliens engaged in trade or business in the Philippines, of course. And all individual taxpayers who did not qualify for substituted filing are required to file their returns on a calendar year basis. Sinasabi ko, January 1 to December 31. The return must be filed on or before April 15 of the succeeding year. Payment of tax, generally the income tax withheld from the salaries or income or compensation of aliens, resident or not, should equal their final tax liability on such compensation. If not, the balance must be paid at the time the annual return is filed. In certain cases, income tax liability may be paid in 2 equal installments. Okay, ito yung mga deadlines natin. Okay? Kaya ako medyo busy kanina kasi marami kaming hinahabol, 'di ba? November 15 na. And I've been catching up on some things for some of the clients, but yeah, these are the deadlines. Okay, individuals and then corporations usually 60 days after end of the quarter. And then quarterly filing of income tax return. We have individuals, pure compensation income earner, annual ka lang. Purely engaged in business or profession, quarterly and annual. For mixed income earner, quarterly and annual. Corporations, quarterly and annual. Substituted filing system for employees for pure compensation income of employees. If employer correctly withheld the tax due of the employee through the withholding tax compensation, no need to file 1700. The 2316 is enough, as I've said earlier. Okay? For further readings, refer to the reference book and the BIR website. Meron tayo dyan. Hindi yan 2019 pala, 2021 yung libro natin. And then, we have, of course, the BIR website. Okay? Again, bayad tayo ng taxes. Okay? Thank you very, very much. Questions?